everyone. Welcome to the Emergence of Payments Ecosystems for SMEs panel. I'm Surinderjit. Bhatti. I'm Managing Director at FGS. We are a financial innovation advisory firm, and we help financial institutions and other industry incumbents to identify and then help launch new opportunities around the needs of the Canadians and really leveraging what's happening in the ecosystem. The topic that we have for today is really interesting and personally really close to me because we're talking about the small businesses and how the emergence of these digital platforms is impacting them in a way that they are able to manage their businesses in a much more efficient way. If you look at small businesses, traditionally, this segment has been underserved by the financial sector, with decades of small businesses trying to manage their finances with a mix of personal and commercial financial products. But over past decade or so, we have seen emergence of these digital platforms that have been helping businesses to either increase their digital presence or help them kind of receive payments in a more efficient and effective way from the consumers. And over past few years, these platforms, as they have grown to a certain consumer base, they've started offering more of a ecosystem offerings to really become this one-stop shop tool to enable small businesses to manage everything and anything around their businesses through their single one-touch platform. And with that, we have our panelists today from some of the top of those ecosystems. So I'll quickly introduce everyone. First up there is Grace Jung. So Grace is Head of Industry Relations, Payments and Operations at Square Canada. She has had over 20 years of experience in payments, cards and mobile payment space. So she's really bringing this amazing expertise from payments perspective to the panel. Grace, welcome and really happy to have you here.
Thank you.
Next up, we have Brian. So Brian Green is Country Head for Fiserv Canada. Brian is an industry veteran. He has been in the previous roles like CEO at First Data Loan Company, GM at Moneris Gateway Services, VP of Merchant Services at Marketing and Business Development at Bank of Montreal. And most recently at Fiserv, Brian has been heading global launch and expansion in Canada. So really excited to have you here, Brian. Welcome.
Thank you, Jeet.
And next, we have Sean Bush from Intuit. Sean is Manager of Strategic Partnerships. He has been working at Intuit for over 5 years, and he's responsible for building these partnerships that really create this ecosystem impact and platformization of services for SMEs. And he's really bringing that expertise on how to create an ecosystem through effective partnerships with players in the ecosystem. So really happy to have you here, Sean. Welcome.
Thanks, Jeet. Great to be here.
And last but not the least, we have Salil Vijay from one of the brand new challenger in the SME platform space. That's CAARY. And Salil is Chief Product Officer at CAARY. CAARY, as I said, is a brand new player, are preparing for launch, haven't launched yet. They are doing this amazing crowdfunding, raising capital through a crowdfunding platform on FrontFunder, and doing really great there. Have been in news around that and have planned an amazing suite of products for SMEs. Before joining CAARY team, Salil has had 15 years of experience in financial services space with roles at banks like HSBC, Amex, CIBC, and RBC. So really bringing a whole gamut of experience from the traditional financial services and innovating there. So Salil, really glad to have you here. Welcome to the panel.
Thanks, Jeet.
So as we start our discussion, I think it'll be really ignorant if we don't talk about the impact of pandemic on small businesses, and what we have seen over the past year. And we know that small businesses in Canada are the largest employment segment. They employ around 88% of Canadians in the private sector. And in fact, overall, the segment is huge. It's 1.2 million small businesses in Canada. So it's not a segment that can be ignored. And that's how your companies are really leveraging this ecosystem and offering them amazing services. Over the past year, I think this segment is the one that has been most impacted by COVID, with the patterns of lockdowns and consumers not being out there and able to purchase these services. And traditionally, small businesses were not digital first. So there have been a lot of challenges that these companies have faced. And in fact, recently, Canadian Federation of Independent Businesses released the stat saying that collectively small businesses in Canada are under a debt of 135 billion. That is due to the pandemic. So huge impact there. And I think now more than ever, it is important to talk about how ecosystem platforms can really help businesses in the post-pandemic recovery, both around managing their finances better, but how do they leave the non-core activities to these ecosystem players and really figure out how do they expand their core businesses. So with that, I'm gonna pass it over to Brian, because Clover launched a little before the pandemic, and I'm sure like right when you were seeing peak in demand, Brian, COVID hit, and you would have had quite an experience around how the consumer behavior changed and how small businesses were tackling the impact. So share some stories and perspectives from your experience.
Sure, thanks, Jeet. Firstly, I want to share that I'm deeply inspired by the determination and resourcefulness of Canada's small business throughout the pandemic. I think their perseverance has been one of the heroic stories that we've witnessed throughout the pandemic. And that said, we offer the Clover solution. Those of you who've been out shopping may have seen something like this. It comes in other shapes and sizes, but that's the most popular one, just so we all know what we're talking about. And over the course of the pandemic, we saw urgent need from SMEs present itself really in three waves. At the outset of the pandemic, Main Street merchants were looking for ways to physically serve their customers safely. This was all about having the most suitable form factor, this initial wave. And Clover's sleek design, it doesn't have any buttons. It meant that it was easy to clean when we thought that COVID could be transmitted from surface touching, right? And its multimodal communication capabilities, like your smartphone, right? At home, it's on Wi-Fi. When you leave your home, it picks up a cell tower and it still works and you don't even know it. That meant that merchants could immediately serve their customers wherever they wanted to be served, whether it was on the curb, in the store, at home, wherever. And Clover, being the first Android-based smart device solution launched in the market, had those capabilities and therefore became very highly relevant. So first wave, all about form factor. The second wave really focused on omni-commerce. And I want to be really clear about what I mean by that, because the term is bantied around a lot. It's not simply enabling a web store. As the world quickly became more digitally engaged, the fundamentals of omni-commerce took on a meaning that comprised a single merchant account for all methods of serving your customer: in-person sales, e-invoices, online menus, web stores, social media sales, etc. The idea was that a merchant could have, a small business could have one merchant account, and they would be able to take sales from all of those different methods. And then two, as part of the definition of omni-commerce, is a single business dashboard of commerce activity that captures all card and cash sales. So I'm selling 100 different ways, reaching my customer where they are, and every single sale is going on one place. I don't have 5 different reporting portals that I have to access. And then the third component of omnicommerce is a single inventory record that collaborates with all of these channels and allows for price and item management and that type of thing. I change the price once, it reflects in all my different channels one time. So if I'm a restaurant and I have an online menu and I use Uber and I use Skip the Dishes and all of the others, I can change my item menus and my price one time, and then it reflects across all those different places where my menu is presented. So that's what I mean by omnicommerce. That was the second wave. And then wrapping up, the third wave of need that we are seeing now as we're hopefully in the final stages of the pandemic is SMEs are looking for a turnkey business management platform. So in our Clover example, our solution is wrapped in a bow and good to go. Business management software, POS hardware, and payments, all highly integrated in one Clover solution, supported by one customer care team. And that's the demand that we're really seeing as small businesses have come to expect more robust digital solutions to run their business as they come out of the pandemic.
Mm-hmm. That's really interesting. I love the way how you lay down the three phases, Brian. And I'm sure the last phase that you said is here to stay. Even when the world opens up and consumers are allowed to be in the shops, people would want to, and small businesses would want to have this wraparound of digital services. Grace, what about Square? Talking about tablets and Square's the chip reader. Tell us about your experience. How did your consumer needs change, and what were your experiences there?
Yeah, similar to, I guess, Brian's customers, I wouldn't say that there wasn't really necessarily like different pain points that we were addressing like pre-pandemic versus post-pandemic, but the pandemic definitely caused an acceleration and the need for businesses to adopt and change the way that they were performing their businesses. With social distancing and lockdown restrictions, businesses needed to do this very quickly in order that they can not only just sell, but also be able to reach their customers and just operate their businesses effectively. I don't think that there's a shortage of solutions out there, but because there's such an abundance of solutions, it's intimidating and it's daunting. If we all take a moment and just sort of think about your local small business, whether that's like a cafe or a restaurant or a barber, their specialty and their what they're good at is not necessarily about how they won't know how to build a website or create an inventory management tool or even know how to market to their customers if customers aren't walk-in traffic. So I think from a small business perspective, like the pandemic caused these businesses to have to change the way that they were doing things and change that behavior really quickly. A good example of this would be we have a hair salon, TJ Co. studio in Kingston, and they quickly, amid the pandemic, created an online store, sold home care hair products and kits, and even gift cards for when they were reopening that their customers could redeem, but also to support them through the pandemic, and even also created virtual appointments. And that was an example of, again, a hair salon being able to adopt digital tools to digitize their business until they could meet their customer again. And there's many examples of that, whether it's the meat shop in Ottawa or a cafe in Saskatoon or the electrician in Barrie. All these businesses had to find new ways of doing business. And for many of them, it's for the first time. And so we made sure that we provide the tools that enabled them to easily do so as well as quickly. And as a result, we had 41% of businesses prior to the pandemic, 41% of our sellers online, and now we've got 61% of our businesses online.
That's a huge jump. That's very interesting. And then talking about kind of how you had to change and kind of adjust your product suites. Sean, QuickBooks has a huge customer base in Canada. What was your experience and how did you kind of quickly, dynamically changed and adjusted your product suite to meet the needs?
Yeah, it's amazing how closely aligned my answer is going to be to Grace's, and that it's undoubtable that a lot of new challenges were thrown at our SMB customers as a result of the pandemic. But what held true was the problems that existed and the challenges that existed prior to the pandemic held true throughout the pandemic. But I think what we saw was the velocity or the impact that these challenges that small business had, or the impact that it had on small businesses throughout the pandemic. And specifically, we look at three core areas that small businesses really struggle with, which is kind of what, where, and how I sell my goods. Secondly, how do I get paid, and how do I get paid faster, especially in an environment where we're seeing a significant shift in the type of payments that individuals are using from physical currency to digital currencies. And then lastly, it's gaining access to capital. How do I gain access to capital, and specifically gain access to non-traditional forms of capital? Because it's often in the instances where small businesses are underbanked or not banked at all, so they're forced to look to other places to find money to make ends meet, to reinvest in their business, to make payday. And the unfortunate thing with all these challenges is that they're massively administratively heavy for small businesses to try and solve on their own.
Mm-hmm.
So Intuit really refocused its strategy to, as we say, kind of help businesses get out of their books and back into their business, and try and lift them out of the 30 to 20 to 30% of the time that they spend administratively trying to solve these tough business problems. So we kind of reset our overall business strategy that focused around 5 big bets to help with that. There's 3 big bets in specific that I think make the most sense to bring up today. The first one is we really wanted to lean in on revolutionizing the speed to benefit. So what that means is a heavy lean in on AI-driven support for our small businesses, ensuring that we're leveraging their data, we're cleaning their data, and we're providing them with insights around the health of their business. The second of ours is unlocking smart money. And so this may be common knowledge to many people on this call or not, but we've got a large roster of products at Intuit, ranging from TurboTax, our advanced products in TurboTax Online. The way we built out QBO as a small business platform, recent purchases of Credit Karma as an example, and then kind of the relaunching of our consumer finance product in Mint. And we're really working hard to find ways to weave these products together to really play the role as a financial assistant at the click of a button for all consumer or small business customers. And then lastly, it's being the center of small business growth. We want to be with our businesses to help them out of the pandemic stronger than they were before and help propel them into the future. So more specifically in the US rather than Canada, we're leaning in super heavy into banking as a service and providing our QB Cash products. Looking at ways to leverage our data as well as financial industry data to bring capital products to customers that were previously underserved. And then lastly, with the advent of these omni-commerce or omni-channel strategies that have been pushed upon a lot of our small businesses, it's around how are we launching our QBO commerce products to help these individuals work across platforms and across omni-channel services.
That's really interesting. So what I'm hearing, Sean, is that during the pandemic or up until now, businesses needed this quick solution to kind of quickly pivot and figure out a way to continue their business, be it kind of getting a digital front or figuring out how to accept payments in a contactless way or in a digital way. But going forward, in the post-pandemic recovery, it's going to be how to manage their business better, how to reduce the time spent there, how do they figure out and pay the debt that they have accumulated over the past year. And then the point that you brought up about AI and using AI to leverage the business data, and how do you probably enable them to understand their finances better and how to manage them better, is what we'll be seeing as a trend coming out of the pandemic.
Absolutely.
Yeah. Salil, so you are basically planning a launch of a SME challenger in the midst of the pandemic. How is your strategy kind of impacted by it?
Yeah, so I really resonate with what Sean and Brian and Grace were talking about. But for us, it was a little bit of a different challenge, right? So since we are pre-launch, it was more about guiding our product roadmap and validating our assumptions on the client needs. We began about the time when the pandemic hit, began working on the project, and boy, did it ever reinforce the client needs that we were trying to solve for this pandemic. And so all this change that you've seen, as painful as it's been for businesses, for us, it's really validated the need of what we set out to build. CAARY's features are really needed in the market. So access to credit, sufficient credit for your working capital needs it was tough before, it became really tougher afterwards. So we made sure we designed our underwriting in a way that takes a completely different look at how we approve clients. The processes of getting a small business or a corporate credit card were manual. And now with 6 feet between people standing in the line in front of a bank, we made sure that the end-to-end experience of applying for a credit card was completely digital. So avoid any document exchange, avoid any white signatures that we are used to today for corporate cards. The products were lazy, right? So for lack of a better word, in the credit card space, it's pretty much a personal credit card masquerading as a small business card. I remember when I joined the credit card game 10 years ago, I used to ask this question, and when I first got introduced to the products, and we had 21 type of credit cards, and some were business, some were personal, and I used to ask, what's the difference between a personal card and a business card? And the answer I would get is, well, that one's called a business card and has a higher fee. That's the difference. And in a bank, you question, and I'm an engineer by DNA, but I would think, okay, that doesn't sound right from a client's perspective. The points program are the same. The travel multipliers, which you keep devaluing, insurances that nobody uses or cares about or knows about. So when we designed this whole platform, we really wanted to cut through all that BS. So all the features that we designed for the car are completely designed from a small business needs perspective, which have been enhanced now in the pandemic, right? So CAARY is primarily we don't look at it for a company. We are primarily a payments and expense management platform combined with a credit and a charge card. So all the features of the platform are designed to solve specific SME issues in the payment space. So it's a corporate card, so we don't underwrite. We underwrite the business. We don't underwrite any personal, so no personal guarantees. We built the adjudication algorithm to go beyond your traditional credit scores, and we primarily focus on cash on hand and other non-traditional factors to decide your credit limits. And so by doing that, we open it up for both your existing businesses as well as startups who may still be pre-revenue, just like ourselves. So we offer no fee physical and unlimited virtual cards. The very elaborate and very user-friendly expense control functionality, and built-in accounting integrations with QuickBooks, and automated receipt capture and automated machine learning-based matching to the right transactions. And we're hoping that we would be launching our MVP. Not hoping, but we're pretty sure that we'll be launching our MVP in July, and in September. With some really cool functionality, I think the businesses will find very useful.
That's amazing. Really excited for the launch and looking forward to it, Salil. Talking about kind of how you are approaching ecosystem and building that with other fintechs in the space, I want to switch the gears to development of an ecosystem. So how do you go about, and how did we reach this time where we are, wherein fintech started with probably a single or couple of value propositions, let's say payments, POS, or is it accounting? And we are at a stage where now the platforms have become a huge gamut of services. Essentially, as I said, one-stop shop. So a small business, all they have to do is register with you, and they can forget about kind of the non-core activities, and you automate them. And with the new technologies coming in, we talked about AI and how we can probably create different scenarios and help businesses take better decisions for their businesses. So I want to talk about how do we approach this development of the ecosystem? So Grace, we'll start with you. How do you approach and how does Square approach adding new value propositions to your existing product suite?
Yeah, at Square, really, we're all about addressing the problems that small businesses face in Canada. And we really take the time to understand what their struggles are. And it doesn't matter where they are in the life cycle, whether that's in starting a business, running a business, or growing. That is what drives our roadmap. And we all know that running a business is hard. We started with a white card reader just to enable anybody to be able to accept payments, as you kind of mentioned. And we didn't stop there, though. We realized that beyond payments, there's a whole proposition of running a business that's expensive, it's time consuming, and it's messy. And we feel compelled to continue to address these problems that all these various businesses face. With the pandemic, we put our customers, we gave them new ways to meet and serve their customers, whether that was in store, online, or curbside, or even at home. And we're focused on building this true omni-channel, and that is more than just being able to accept a payment. The core of omni-channel is about buyer and buyer engagement. And that, like, we provide those tools so that sellers can engage with their buyers throughout our ecosystem, throughout our various products. And that also enables our sellers to have a holistic view of their business as well as their customers. And it gives them that independence. We give them simple tools that are intuitive, and they can have this view of their business that can also help them see the potential of where their business can go.
Mm-hmm. That's really interesting. And when we kind of look at, you said that starting with the card reader and where the platform is right now, did you approach kind of adding new services to the platform, and did you approach partnerships more there, or was it mostly kind of developing things in-house?
It's a bit of both. It depends on what the problem is that we're tackling with, but definitely we do have a partnership model, and we partner with banks, we partner with platforms, we partner with the developer community, depending on what that need is. So definitely partnerships is a key part of building that ecosystem. Mm-hmm. We find that our sellers do stitch together processes, or they do banking here and they use payment processing in one place. And so we give them that ability to have that all managed out of one simple dashboard or one simple tool that we integrate and stitch together for them.
Right, that's interesting. And especially in Canada, like we at FGS track the database of Fintechs. And I think as per our latest data, there are around 400 Fintechs that are offering services for SMEs. So be it accounting, lending, payments, inventory management, a whole gamut of services. And that's quite a bit of talent and services out there that we can leverage while building these ecosystems. Talking about that, Sean, how does QuickBooks approach ecosystem, and how do you see the development?
Yeah, so you can, Grace, kind of continue to steal my thunder a little bit. But I think it's I hate to go back to the pandemic, but it is a nice precursor in a lot of ways in that the expansion of fintech in Canada was growing at a torrent pace prior to the pandemic. I think what's happened since then is it's escalated things further in terms of the speed of innovation. We've seen our small businesses having to digitize their value chain overnight, and it's pushed forward commerce 3 to 5 years into the future, right? We've got consumers now looking for different ways to spend their money, physical versus digital cash, and where they spend it in e-commerce versus mobile commerce environments. And then lastly, we've had merchants being forced to kind of reimagine their business altogether and, introduce things like curbside pickup, which was like almost unheard of prior to this, and developing digital storefronts. So, I think what's happening there is it's continued to accelerate some of the precursors to the pandemic, which is an influx of fintech providers joining an already fragmented fintech space and further fragmenting it, where they're able to jump in and provide these services, covering the full gamut of the value chain of small businesses. And I think with that comes a few impacts to the small businesses. From a pro perspective, innovation is occurring at a rapid pace, and small businesses are able to take advantage of these various forms of innovation and identify opportunities to create efficiencies and run their business. And on the back of that, though, there's some challenges. Small businesses are great business owners and good at what they've set their business up to do. And there's becoming a lot of confusion around what tech partner should I use? How do I assess them? How do I integrate them? How do I apply them to my business? And off the back of that, I think, what we've heard from our customers a lot is that with these multiple integrations and multiple tech partners, fintech partners that people are using, it creates disjointed experiences, one for the consumer at times, and most importantly for the merchant when they've got various fintech services at different stages in the value chain. What they're now doing is dispersing the data associated with the business and the single view associated with their business across multiple partners. So then steps in the importance for platforms. And that's what we're continuing to see as well too, is that it's almost becoming a default easier for a small business to go to a platform, like a Square, like an Intuit as an example, that help provide these data-rich and intelligent end-to-end services for these customers, but also via partnership model allow these various technology providers to hook into those platforms. And competitively, it's caused uber forms of competition amongst these platforms and amongst the financial institutions. But I didn't think more importantly than that, it's offered increased opportunities for people like myself who are in the partnership space to really lean on forms of collaboration to help grow platforms into adjacent services and also scale into different forms of demographics.
That's interesting. And when we look at the customer segment, SME as a whole, it's huge, 1.2 million SMEs. But how do we, as we develop the ecosystems, how much does the input in terms of what industry these SMEs belong to or what kind of businesses they are in, how much does that impact the product development and ecosystem development? Brian, feel free to take this one.
It's a great question because no, small business person is going to describe themselves as a small business person. Like in Grace's opening remarks when she talked about a barber or a retailer, they're going to identify themselves by the types of customers they serve and what they serve them with. So we are investing in solutions, Clover developed solutions for certain verticals like restaurant, retail, and to a certain extent services. But we can't be all things to all people, and therefore we have to be a collaboration platform. So if you think of the long tail of all the different verticals that exist out there, whether it's a business that rents tools or a business that runs a winery, and we can go on, they all have their unique solution functionality needs, and those needs have to be met. And they have to be met, just hitchhiking on previous themes from my co-panelists, in a way that's not messy, has to be very efficient and easy for them to consume these technologies. And they want to be able to consume the technologies in the look and feel of the platform that they've already subscribed to. So whether it's Square or it's Clover, they expect a certain look and feel type of experience. If my customer is a winery and they have certain inventory management needs and certain supply chain needs, they have to be able to assume that functionality, which I may deliver to them through a third party, through our ecosystem, by having good APIs and sandbox and everything like that. But I have to provide them with a consistent look and feel. And I do that so that I'm fair to the customer, so it's easy for them. But also, in order to be successful, Clover has to be an ecosystem that the customer, the small business operator, wants to stay within. They need to be able to serve and supply their business from within one ecosystem. It's simpler for them, and ultimately it creates a better business model for us.
Right. That's and what about I like how you mentioned that these small businesses approach it not by industry or by small businesses, but by the type of their consumers. What about the growing gig economy? What are we seeing kind of or are your companies building separate strategies for gig economy workers, or is it still kind of they're covered under SMEs? Because I feel their needs are a bit different, and they might need like a separate suite of products from the overall SME commute.
I mean, part of our strategy definitely is to partner with financial institutions wherever possible. We think that they're great partners. They have great capabilities. If we can coexist in the right type of ecosystem, we want to do that. That is Fiserv's model. The gig economy is seeing some needs really come to the surface, such as earned wage instant payment.
Yeah.
That is going to be table stakes for any of us who want to serve the gig economy. We are going to, soon we're going to talk about payments modernization, and that's going to bring in request to pay. That's going to be table stakes eventually. And those are just a few of the examples. So we quickly commercialized e-invoice at the start of the pandemic, and we just made that a free option of Clover. You get Clover, e-invoice comes with it, no additional fee, and we found very, very high adoption right out of the gate for e-invoice. And the other kind of tangential thing that we found was we took QR codes as a way for small business to engage the consumer, and we broadly socialize them within our environment, whether it's to allow a consumer to find out what the merchant is selling, a menu, for example, or as a way of making payment. And so we think that we're going to continue to see QR codes be integrated into a lot of different customer touch points.
Mm-hmm. And as we're seeing the development of this ecosystem, I feel the lines between different industries are blurring as well. So we are seeing e-commerce players. So Shopify launched their Shopify Balance Card and account and really entering into the financial space. And overall, kind of all the ecosystems are offering at least POS, payments, inventory management, certain amount of accounting and bookkeeping capabilities, and some of them are now entering into cash flow management and budgeting and projecting as well. And then banks are piggybacking on the fintechs as well, partnering with them to offer their consumers an ecosystem type of experience in online banking platforms. So how do we see the competition in the industry being impacted by this? Whereas we see collaborations, but then definitely the lines are blurring and the customer base is the same, SMEs. So how are we seeing competition change in the space? Salil, why don't you, well, let's start with you.
Competing with banks, so yes, banks are partnering with fintechs, well, at least the idea is that it would be beneficial for the end consumer if there was actually partnerships, right? A true partnership is beneficial for the end clients, right? Banks are all things to all people. Well, we as fintechs specialize in one area, and we likely solve that problem really, really well. So with the partnerships, banks can gain access to the latest tech stack, and we get access to the market and establish scale and brand. In the end, the clients should benefit, right? Banks realize this obviously, and they're innovating and changing their approach to the ecosystems, with the ecosystems. But in my opinion, not at the speed of innovation and delivery that's required, specifically now in post-COVID world, right? Or at least that can be delivered by fintechs. Most of the partnerships that I've seen are, outright acquisitions by banks, or more a vendor relationship with a fintech, whether they do it to digitize their processes or want to take a more ecosystems approach by adding a non-traditional services to their otherwise traditional products. Mm-hmm. So I haven't seen a true partnership or not a lot of them, where both the fintech and the banks would benefit from it. I think it would change, as Brian mentioned, as as open as if once the real-time rails comes up and open banking comes up, there will be a lot more of that happening. And one example I do know is, for example, we work with Flinks. So Flinks is an example of a partnership where from their clients to the banks, right? There's a synergy there. But for now, I think hasn't materialized in a big way. I'm be interested to hear what what the rest of you guys think of this.
Yeah, definitely. And I think you brought up this interesting point that there are not a lot of partnerships where both the parties are benefiting. So I think the question kind of comes, and this is the question in the retail space as well for retail consumers: who owns the consumer relationship at the end? So a bank can be behind a fintech and really issuing the cards or offering the capital and using fintechs as channels of distribution, but who at the end owns the relation? So what's some of the, let's say, half crazy predictions that you have around this space? Grace, do you want to take this one?
I don't have a prediction. I think that, and it's whether who owns the customer. I think the customer is going to choose the solution that meets their needs, right? They're going to look for something that is, again, easy for them, where it's sort of an all-in-one toolbox versus having to do all that integration themselves. And I think partnerships is definitely a way to do that, whether it is with a bank in the back end or a platform on the front. I think I think it's really about there is a spirit of partnership, and there's a spirit of like we're all in this together. We all have this common theme of we're here to serve small businesses in Canada because they've been underserved and they continue to be underserved. And they do make up 98% of businesses in Canada, but they don't have fast access to funds, easy access. So I'll leave it at that. I think, again, partnerships is still very important in this. Right.
And Sean, what do you think about it? Is the development of ecosystem means moving together, or does it mean there will be like groups of companies who will own the relationship and the others at the back end? What do you think?
Yeah, I think, especially as we look at the evolution of banking as a service, one of the areas that we're getting super excited about here at Intuit is not actually the function of banking of a service itself, but more of the mindset around banking as a service. There was a report that came out from IBM not too long ago, and they quoted around 80% of FI executives starting to recognize the need to work with platforms for banking as a service, and that they can, complement one another. So, I think it's a move together thing. There is no reason why, platform banking as a service and the financial services industry can't stand side by side with one another to benefit the customer. At the end of the day, there's innovators and tech providers and platforms out there that need to bring these services to customers, and they often need to do it through FIs to get access to traditional banking infrastructure or to help navigate the world of some of the regulatory challenges that exist out there. So I think it is at the end of the day, a better together story or a move together story. But as Salil did say that, I believe that open banking will help that in terms of allowing some of the traditional FIs to modernize and catch up to allow that better together story to be a bit more compelling than what it is today.
Right, definitely. I think as kind of the data becomes more easily available to all the parties, it'll definitely create a more level playing field, and then ensure that competition and both innovation move ahead. Brian, what's I feel you'll have an interesting take on what's gonna be. How do we see the ecosystems play up in next 5 years? Like, what's your take on it?
Yeah, first of all, if you look at what Square and Shopify, Intuit, Stripe, Clover, those are the big platforms for SME right now. Those are the ones who have scale, and scale is really important. I don't think anybody who doesn't have scale looks at becoming a SME platform and say, "Oh, look, this looks like it's going to be easy." And the banks right now are looking at these platforms, and they have to be thinking about how they can get in. We keep the door open to that, but not everybody's going to keep the door open to that. So I think ecosystem operators are consumed with two things primarily. First, and when I say ecosystem operators like Clover, Square, etc., I'm going to speak for others. Keeping it simple, I think we're consumed with two things. One is what's your differentiation? What really stands out that defines you more than anything else? And what's the most productive acquisition model that suits that differentiation? And second is that we keep the SME in the ecosystem, which means we ring fence the relationship. We all are thinking about how to ring fence the relationship to some extent. And by definition, that means we need to offer a broad range of financial services.
Right, and I think like most ecosystems are kind of approaching it that way, like being really building a strong consumer base with this one strong value proposition, and then adding a whole gamut of financial services. I'm going to take one question that's really intriguing from the audience. So Jessica, I can't see the name of the person, but they're asking, given that a lot of SMEs are already price sensitive to e-payments before the pandemic, how are you addressing the resistance to incur higher transaction costs when it comes to migrating on the e-store or kind of digital commerce? And what's the pricing model that is more readily accepted by the SMEs?
I just want to make sure I understand the question correctly. Is it related to the actual cost associated with
migrating? Right. Yeah.
Yeah. And so I think the way that we've tried to look at it at Intuit is the cost. We're trying to provide value-add services beyond the cost of payments itself. So when we're providing a SaaS-based model with additional internal payment costs, let's say I'm doing business with our feature, the position that we try to look at it with customers is that the true value of using our platform and actually paying for payments in addition to that comes in the form of reconciliation. So, we've got examples of customers today who are, they're using check, they're using cash, they're using e-transfer services and credit cards. And it's a really highly fragmented experience. So what we're trying to package to customers is that the value associated with the cost of using our platform and the payment services provided by the platform come more in the way of, one, the data that we are able to harness behind the payments itself to repurpose as means to use for smart business decision making or scenario planning for cash flow purposes. And then two, the automation of all your accounting, bookkeeping, and reconciliation tied to those payments.
Right. And I think kind of considering that the businesses don't have a choice at this point, like they have to migrate, there's a more cost to not migrating rather than doing so. So that totally makes sense. And when you are getting a whole range of other database services to better manage the business, so why not, right? Salil, we have a lot of questions coming around Kerry. I guess the audience is excited about the launch, questions about MVP and future markets and what you are looking to address. So maybe you could take a couple of minutes. We're almost out of time, so I'll just give you a minute or so to quickly do probably a quick elevator pitch on Kerry then.
Sure. So, let me answer the question first. And what markets are we launching? So the first launch would be as market launch would be in September, and we are industry agnostic, but we're staying in Canada for I think for at least for a year and a half. The expansion to Quebec will have to happen in the second step, but that's our first couple of years would be in Canada. But then US is a natural progression from here, and so on two angles we look at it from a product roadmap perspective, and then in which industry we're going, or rather which market we're going after. Those two angles we have to look at, and where, of course, we're going to be taking a lot of feedback from the clients as to what's working and what's not working. But from a market perspective, I think we're staying in Canada for at least a year and a half before we move to US. From a product perspective, I think It's a, like I mentioned, it's a no personal liability card, both physical and unlimited virtual cards. You can order a dedicated card for your merchants, subscriptions, or spend categories. You can even order a single use card, cards that expire after a single use. If you're worried about a new online merchant you're trying, for example, you could use a card that expires after that one transaction. You can use, and I say that for my friends who are experts at this, set expiry date on your card, so you get a new virtual card for a free trial that you want to use, and set it to expire right before the fee kicks in. Right, every transaction you get a text from CAARY, and you attach a receipt and write a note, and we read and match that receipt to the correct transaction. It's a one-click sync to your accounting software. We're going to start with QuickBooks, and we're going to expand into others. So all your settings in QuickBooks are carried over to CAARY platform, and you get to set your accounting rules by card, by merchant, or by team. You can assign cards to teams and monitor their spend at a team level. You can set budgets. You can set limits on all your cards. And in December, we'd be launching a B2B and a B2C money transfer functionality, talking about ecosystems.
That's
that'd be
awesome.
free to use.
Amazing.
For vendor payments and out-of-pocket expenses for staff. So
that's great, Salil. We are excited about how you change the trends in Canada, and really excited to seeing kind of some of the use cases that you mentioned come to life. With that, we are almost up to time, so I wish we could have taken all the questions, but some of us will be available on Brainwait, and we can continue the conversation there. And with that, I would like to thank the audience for the attention and the engagement. And then, of course, our amazing panelists. Thank you for coming here and really helping us take this conversation forward as to how do we enable the Canadian SMEs to get the best financial services and the best one-stop solutions, and really make that at par with what's happening globally. So thank you all a lot, and signing up.
Thanks, everyone.
Thank you.